Welcome to the Daily Insights That Matter. The Federal Reserve has raised interest rates for the seventh time in a row by 50 basis points. The increase brings the Fed's benchmark interest rate, which is used for everything from setting mortgage rates and loans to credit cards, to a range of 4.25% to 4.5%, which is the highest level in 15 years now. Wednesday's hike also marked the Fed's seventh rate hike in this year. The Fed is responding to inflation in the US that remains nearly a 40-year high, though it has dropped since hitting a peak of 9.1% in the month of June, helped by a decline in energy costs. Now, the latest inflation print in the US came in at 7.1% for November, down from 7.7% seen in October. Mr. Powell stated that while signals of inflation improving encouraged him, he needed a little more information to be certain that it was on a sustained downward trend. Now, as the tone clearly indicates, more rate hikes may be on the way. Now, one of the most significant consequences is that higher interest rates in the US can cause an outflow of foreign money from India as investors seek higher returns in the US. This may cause the value of the Indian rupee to fall. However, do remember that the macroeconomic fundamentals of India are improving, and up until now, robust institutional and retail participation has moderated the effects of the US rate hikes. India's growth outlook has been steady and supported by high-frequency data related to credit growth, housing loans, toll collection, GST collection, railway freight, etc. India's wholesale price inflation cooled to a 21-month low of 5.85% in November. This was helped by easing prices of food, fuel, and manufactured items. The wholesale price index stood at 8.39% in October and at 14.8% in November last year. The fall in wholesale inflation adds to the cheer after consumer price inflation eased to 5.88%, below the RBI's upper tolerance band of 6% for the first time in 11 months. Now, this is the first time that the WPI inflation has been lower than the CPI inflation since Feb 2021. Back then, the wholesale inflation was at 4.83% and the retail inflation was at 5.03%. Now, the sharp decline in the wholesale inflation in November was on a sequential fall in prices of two of the three major commodity groups of the WPI basket. Food inflation fell to a 22-month low of 2.17% in November, while manufactured products inflation eased to 3.59% from 4.42%. Now, the continued fall in WPI inflation is in line with the drop in retail inflation, which will be welcomed by policymakers. While seasonal factors are one of the reasons for the sharp fall in WPI and CPI in November, it does provide a relief for the economy collectively. Overall, the reduction in global commodity prices is also comforting for inflation. Now, the easing in both retail and wholesale price inflation strengthens the case for the central government to revisit its monetary tightening measures and announcements going forward. So what does all of this news mean for you? The US Fed has raised interest rates yet again, but this time the pace of interest rate hike eased after signs of inflation slowing. Now, this will have an indirect neutral impact on you for time being. We continue to keep our reservations on the inflation outlook as there are several factors driving it. Now, having said that, the moderation in both the wholesale and the retail price inflation will provide comfort in the policy setting framework to the RBI in the coming months. This will therefore have an indirect positive impact on you for time being. While I say this is Raj Mehta signing off, wishing you and your loved ones the very best. Thank you.
Did you like watching this video? Then download our app Informed Investor to watch more such informative and interesting videos.